Okay, today I would just like to go through EURUSD past price action for the month of October till now. That's from here. Then what I'm expecting to see this week and next week and this month. So for EURUSD, starting from October, we first see an uptrend in the past month of August. You can see higher highs and higher lows, higher highs and higher lows. Then for some time we see a downtrend. The uptrend continues up to the month of the 25th of September. So we can see in the here we have a shift of market structure after this consolidation right here now. After this consolidation, we see a shift of market structure, right here. After that shift of market structure, we see price go down aggressively. It went down really aggressively without really giving any valid retracements. If you go to lower time frame, you might see an entry, but on higher time frame, so not really an entry. Yeah. So it went down aggressively. Then the market came right here. Forming this liquidity, equal highs are liquidity in the market. So when I see these equal highs, I know that the market will after here come down a little and come and take these equal highs. That is what I'm going to expect. So immediately I see this, I start looking for buy opportunities. So when I see this, you see this candle. When I see this candle, I know that there is liquidity resting here. Why do I say that? Whenever you see a candle in the market that looks like this, whereby this is the body of the candle. So let me change the color of that. So let's say a bullish candle. This is the body of the candle. Then you see a wick, very long wick like this. Let's reduce this. You see a very long wick like this. Automatically, you know that the market is going to come and take out the liquidity here before continuing its direction. You can see it happen so many times in the market. Whenever you see candle like that, you know that there is liquidity resting there. You know that there is liquidity resting there. Yeah. So when I see this, I know that there is liquidity resting here and the market will come down. So immediately I see this, I won't start taking this other block as my entry. Though if you take it as your entry, you still profit, but for me, I won't take it from there. I will take my entry from here, because I know that the market will eventually come down and take off this liquidity, and my target would be this, but the market didn't really get there. So let's say on a normal I target a 1:5, so my target will probably be here, there. Then after that, I can see that the market shifted structure with that move, this forming, you can see another equal high here, another liquidity here. So the market shifted structure with this, here is a shift of market structure. So the market broke. For some time it started a new downtrend, a shift of structure here. Let me remove this out of you. When you see this shift of structure, I start looking for any valid POIs. You can see that this place also formed a liquidity that the market will take, but due to the market has already taken the liquidity in this one, I'm looking for some buy opportunities till I see a shift of market structure. So you can, if you go down to lower time frame, you can see the other block. There should be another block somewhere here. The market came down, reacted from it here, but I also see a reclaimed block, but the market didn't really get there. So this would be a missed enter. So the market came up, took out this liquidity here, then came, stayed all the way down, then it's reacted from the breaker block here, this breaker block here, the breaker block here, sorry. Let's see. Yeah, so the breaker block entry, we see a break off here. Sorry, let me just clean all this. So we see a breaker block entry model here, though price didn't get to it, so it's just the market was aggressive, so it wanted to see the breaker block. But then maybe a breaker block entry model is when you see something like this, the market is in an uptrend, then it breaks here and also comes and shifts structure. We expect to now sell the market from here. So this other block here that was not respected is now becomes, because on a normal you'll be expecting to buy from here, for another break of structure, but the market just goes past the other block. So that buy other block now becomes a breaker block for a sell. So you're expecting to sell from that other block. So that is what I mean by a breaker block entry model. But the market didn't really get to our breaker block here. But if you go to higher time frame, you might see a more clear breaker block, but I don't see anything. So the market kept on going down and down and down aggressively. Then we see this break of structure, BOS break of structure. If you haven't watched the video on market structure, I recommend you go and watch that video. Then we have two entries. This is the first. This is our first order block. Then this is the second one. One of the most valid order blocks that you see are order blocks that show indecision. Other blocks like this. Other blocks like this. Sorry about that. Other blocks like this and other blocks like this. okay, let me elongate this. Other blocks like this and other blocks like this. A pin bar like this. They carry much power, and once you see them, you can go and check it out. Once you see them, they work quite perfectly. So for me, I would take, you can see the first one is an indecision candle, the second one is a pin bar. So for me, my first entry would be here. I would take this first. And my target, this would have hit a break even. I wouldn't actually get a loss on this, but my target will be this because of what? Because of liquidity. You can see that huge wick. There. What I told you about liquidity resting on wicks. So the market would have taken me out. At this juncture. But once I see this shift here, I would immediately move my stop loss to my entry, hereby closing all losses. Yeah. So the market would have come and then reacted from this one here, taking out all, using this one as inducements and taking out all the liquidity there. So it will read all the liquidity on this high here, then shifted structure here. But the real shift of structure actually happened around here. Okay, let me show you something in lower time frame, the 15 minutes. Let me show you something. You know, I was in the 3 hour, it's the higher time frame. So some things are not actually so visible. Now look at, you can see that's high, that's week of liquidity here. Then the market shifted structure. When did the shift of structure happen? The shift of structure happened right here. This is your shift of market structure, viewing from the lower time frame. Then once again you see a breaker block entry model. Yeah, a breaker block, break of here, then shift of market structure. The market comes back to the intended order block. Using this as inducements. And it sells. So you sell from here. For me, my first sell will be from here. Stop loss above the fair value gap, on top any fair value gap you're seeing here. Your stop loss should be above it. Then my targets are where that liquidity. What's going on? God. My target is now that liquidity that is resting on that high. So let's go back to the 3 hour time frame. So you would have caught that's nice money. This is a 1:12 hour. So if you're risking $800, you're in for $1,200. It's massive. So we can see the break of structure that happened here. Market didn't get to our order block. Probably getting to it later in the future. I don't know. Didn't get to the other block. It just kept selling. But when you see this break of structure, you don't really expect the market to still get back here. You start looking for another order block here, but this place is too wicky. The market took the liquidity on this one, but didn't really take liquidity on this one. So if you took this tiny or hidden order block here, good for you. Then the market proceeded to break structure aggressively here, taking out that, okay, didn't take it out. when I see this, I wouldn't be moved by this shift of structure here, because there is still liquidity extend down here. I know the market will come down and take out. So where did the market react from? Once again, a breaker block entry model is not really that visible. There's a mitigation block here. There's a mitigation block here. So it's not really visible, but if you look, you'll be able to see somehow a kind of shift around here before this break of structure. Use a break of structure. So this here is because when you see this, you would like to see a reaction from this other block, then a break of structure here, probably going for this other block up here, but the market, because of news, it broke off this. Then also you know that this breaker block is valid from this inducement, very close to it, and this here should be a low. So the inducement took out this low, making it valid, making it quite valid. But you might also see a buy here. I see a buy if you're using the good. If you use the golden zone, I think market went to the golden zone. Nah, didn't get to it. So after that, you see that liquidity taken out. If this liquidity was taken out with something like a candle like this, if I saw a candle like this after this liquidity was taken out, I would like to look for buys, like a very long candle like this, a very long candle like this. If it's what took out this liquidity, I would like to look for buys. Like if I saw this type of candle, I saw this type of candle here, if I saw it here, I will be looking for buys. But because the market broke it with this is a valid break of structure, I'm still looking for sales because the market is still bearish, it's still going down. Yeah, it's still going down. So when the market came and reacted from this right here, came and reacted from this and kept on selling, broke structure here, and now as you can see, the market is still bearish up until the point, if it breaks this high. I now know that the market is now bullish. So anything, this is my protected level. I thought targeted and protected levels in the market structure video. So now what am I expecting for the next week and the month of December? If you are listening to me well, you see that here is liquidity here, weeks, long weeks, and another liquidity here. So whichever the market first takes, I'll be interested in moving from there. So if I see the market first take off the liquidity below here, I would be interested to buy. I'll be interested to buy for the market to take out this one here now. But if the market first takes out this liquidity here, I wouldn't be interested in this buy zone again, but I'll be interested in this sell zone for the market to break this low here to continue its downtrend. So next week I'll be looking out for this break and this as my inducement. This is not a financial advice. You know what, but I'm just telling you what I myself am looking out for. Then my stop loss will be below this or just here, and my target is liquidity or this fair value gap. This fair value gap here. This fair value gap here. The 50% of the fair value gap, that would be my target. Yes. So this is what I'm looking out for. This is inducement. Okay, yeah, I think that will be all for today. So I'm thanking you for watching the video. A subscribe and a like would be good. Then my academy is open for the month of January, so if you're interested in registering, you can just follow the link in the first comment. Yeah, it's pretty affordable. I made it quite affordable for everybody. So I would like you watching this video to register. Just follow the link in the first comments.